Good day, traders. Good morning, good afternoon, good evening from all over the world. Today, we'll be talking about the human mind and forex trading. Now, it is such a beautiful thing, a wonderful scenario that a market repeats itself. Same patterns, but different variations. Now, years back, I learned something about redrawn low of wicks. So in an uptrending market, we may get a 1 2 3 against the trend, and the following week or in that week we may get a continuation of that trend. This can be a Tuesday, Wednesday, Thursday, and a Friday continuation. This can also be a Thursday, Friday, Monday, then a Tuesday continuation. The redrawn low of wicks becomes a potential signal. That is to say, Friday can close as a first green day on the back side of the week. Thursday can also close as a first green day. Now, in the opposite direction, when the market is dumping down on higher time frame, Wednesday and Thursday can be a signal day and our redrawn high of week. Okay, so we can have redrawn highs of weeks and redrawn lows of weeks, which has been updated in the ebook. The update is there, but I'm still working on some other stuff about the entry. It will be done very soon, and for those of you who have the ebook, it will be sent to your emails automatically. Now, I want you guys to look at this chart. Just take a look at it for some minutes. Look at how it built up from Wednesday, Thursday, Friday on the back side of the week. Day 3 close as a signal day. The theory, 3-day setup, high to low, low to high, will evolve to a signal. It's a pattern which I have made part of me, part of my mentality. So we as human beings, we have the power to adapt and to get used to a specific setup. These setups are always, the best of them is the 3 days of breakouts and the 3-day setups. Now the first green day is a good setup, but before you understand a green day and a red day, you have to understand how it builds up. That is to say, understanding the foundation, okay, can help you identify the building of that foundation. All right, let me not go too deep, but then I want you guys to take a step back, sit down, visualize, look at these patterns, make them part of your muscle memory. The muscle memory is your mind. Absorb them, recognize them. It's a pattern. Make it part of you. Make it part of you, and you would notice that the entry won't be a problem. Like I said, volume can be held down low or up high on day 3 for a collapse or a continuation the next day. Now let's take a look at the British pound Swiss franc and the Euro Swiss franc. Remember vividly yesterday's video. GBP Swiss franc and the Euro Swiss franc were marked out for today. And if you go to that chart now, we can see we're in massive profit. Let's take a look at this. But first of all, take a look at this. 1, 2, 3 signal. Continuation in the direction of the trend. A 3-day setup will either reverse or continue in the direction of the trend. We need to read, understand, look at the overall direction of that market, and then apply what we have read. Now let's take a look at charts. British pound sees Swiss franc. Thursday, Friday, Monday. Remember what we have now. We have 3 lower closes. The market held volume low. This market has triggered 3 days of shorts and is back in balance. Now when it trades to the opposite side of that balance, we reapply the balance guidelines. This has also been updated in the ebook. Now look at this chart. It is a 1, 2, 3 which did not reverse on Monday. It gave a buy setup, it gave a buy entry in London. Okay, 5 a.m. it reversed. Okay, but now the next day it traded back into that level. Okay, broke out and failed a false break reversal, pin hammer and an engulfment. Okay, reversing back to the opposite direction. Okay, now you can see London traders, in fact from Asia, London traders are in profit. Now we've gotten back to the opposite side of that balance. Will the market stay out of balance in relation to the opening range high of Monday? The high of Monday, the Monday's high of this range. Will they stay outside and potentially hit the 200% projected level from yesterday? Go there. Now already I'm in early, because whenever I work on this market, I come in early. I'll be posting the screenshot on the YouTube community. So the only thing that can stop a lot of traders is, let's say, work. Most of you have very engaging works that you may not have enough time to look at your chart and to see what is happening on that chart, so you can align yourself, or let's say at least when you close from work you should visit your chart and mark them up. Now that being said, our reversal as projected from yesterday has played out. Let's take a look at Euro Swiss franc. Can you see? Can you see the 1, 2, 3 in an FGD? 1, 2, 3. Thursday, Friday, Monday, which evolves to an FGD. Tracking this market is not easy, but the moment you can track it correctly, you make a lot of money. Day 1, day 2, day 3, FGD on Monday, a reversal on Tuesday. The signal is on Monday, the reversal in the direction of that trend, of the overall trend, came up on Tuesday. Now this market is totally out of balance. I was in very early in London. Now let's talk about the human mind. Now when you can program your mind to recognize these patterns, also you need your chart to be set up. The previous day's high, previous day's low, monthly high, monthly low, and closing price levels needs to be available. This will help you track and understand what the market is doing in relation to the setups we have learned from the master Stacy. Program your mind to recognize. Program your mind to recognize. Now let's take a look at another 1, 2, 3 from the back side. You can see a 1, 2, 3, 1, 2, 3, a reversal against the trend. A 1, 2, 3, a continuation in the direction of the trend. How does price behave on day 3? Or how does price behave the next day after the signal is printed? After the signal is printed, how does price behave the next day? How does price behave? Now let's zoom in and take a look at entry patterns. Now understanding that it's a 3-day setup and we want to look for an entry in the direction of the trend, because a 3-day stop hunt is in a direction against that trend. So I want to be buying since the market has given us a signal that a 3-day stop hunt against the trend is going to be a green day signal for us to buy. Now we all know how the best parabolic templates look like. Now we had a market that dumped in Asia. First observation, a market that dumped in Asia. Give a V bottom. We want to buy the low of the day, low of session if it presents itself, or we have a green day signal. The market locks in the low. This becomes the low of the day. Market proceeded to consolidate. This becomes our initial high. And in consolidation, this begins to make higher highs. Now if you look at this consolidation, we can a little bit stretch this line upwards. That becomes what? An ascending triangle. A V bottom, an ascending triangle. The market is now ascending. So the ability to recognize little things like this, little observations, can really help us in trading. We have an ascending triangle, we have a consolidation inside of that range, we have a breakout of that consolidation. This is 2 London Open, 2 a.m. engulfment and a pin hammer. on a bigger engulfment, locking in that level. Now, I did not sleep very early last night. My first entry was in Asia, down low here. Second entry came off in London when I woke up. So let's take a look at higher time frame. What confirmed this on higher time frame? Now you can see that structure, pin hammer and an engulfment. Okay, pin bar, a big engulfment, a bigger engulfment in the direction of that ascending triangle. Let's take a look at the 1 hour. You can see the 1 hour, how it looks like. Now also remember, do not forget the EMA. We want our EMA to coil in the direction of our entry. Where was the coil? In London. This is the coil in London, the direction of our entry. EMA has coiled. Do not forget, this is a consolidation. Coiled out of the consolidation. That is a consolidation. See there, consolidation. In gap time, London opens up, boom, we fly to high. So pay attention to what happens in Asia. Remember, Asia sets the initial high and low of the day. If the Asia low of the day holds, you know what that means. The market starts making higher highs. When it starts making higher highs, it's a formula for what? A dump and a pump. We have a breakout of the opening range. When the market stays out of the opening range, it's an opportunity for traders to go in for a continuation, a breakout, pullback, continuation. If you can't enter in Asia or at the coil out of the consolidation, remember the coil is a consolidation. The 5-minute EMA must coil in the direction of that explosion when it is ready to move. If you can't enter here, you should be able to enter when the market is ready to go out of balance, breakout, pullback, continuation. When the markets go with you guys 1% better every single day. Thank you for watching. Thank you for liking and sharing. When the markets go with you.